It gives me great pleasure this morning, on behalf of the JSE and our CEO, Nikki Newton-King, to welcome you all here to the second day of our Building Africa's Financial Markets Conference. We're doing a symbolic market open this morning, and I wanted to tell you a little bit about the market open ceremonies at the JSE. The people listing on the main board get to sound the kudu horn. On our Altex market, it's beating the drums, and the interest rate market is blowing the vuvuzela. In a little while, I'm going to ask Sulua and Sally-Ann from Bloomberg to come up and play the instrument that they choose. This month in South Africa is Heritage Month, so we've had a number of legends who come and opened our market. We've also had some sports people come and open the market, and certainly for a lot of the guys at the JSE, one of the Springbok rugby players, Dwayne Vermeulen, opened the market a little while ago, came with rugby ball in hand, and that was very well received. Today, our market open is being done by Bloomberg, who are the platinum sponsors for the BAFM conference.
We use the market open to really bring more people into the exchange, and it also gives us an opportunity to promote the JSE to an audience who would ordinarily not have access to the exchange. We have a market cap at the JSE of 12 trillion rand, and we have 390 companies listed on the JSE. The average trade on the JSE per day is 19 billion rand. And two things we are particularly proud of at the JSE is that for 5 consecutive years, the World Economic Forum has rated the JSE as the best regulated exchange in the world. Nikki always talks about the neighborhood that we live in. It's not good enough for us to be great. It's important for all of us to be great. Because when all of us are great, we attract a lot more investment to the country. It provides job opportunities for this very young population that we have in South Africa. And again, because we are committed to the growth of the African continent, it's for that reason that the Building Africa Financial Markets Conference is so important.
I'm going to ask Sulua Shakri, who has come to us from Dubai, where she heads up the Middle East and Africa operations for Bloomberg, and ask her to come and give her address.
Good morning, ladies and gentlemen, and welcome to the Johannesburg Stock Exchange market opening ceremony. I would like to express my sincere appreciation to the Johannesburg Stock Exchange for inviting Bloomberg to participate in this opening ceremony. I'd like to take this opportunity to talk about what has been shaping and continues to shape the world of finance. So there are 3 areas I'd like to focus on. The first one is to give a bit of background on why the world's leaders have been focusing on regulating those markets. The second one is to speak about some of the main commitments and where are we with the implementation. And the third one is really why is this relevant for Africa. In the wake of the financial crisis and following the collapse of Lehman Brothers, the G20 countries met in Pittsburgh in September 2009. And amongst the outcome of the meetings, the G20 made a number of commitments, and the key ones are to alleviate the systemic importance of derivatives, as well as make transparent the pre- and post-trade data that were widely seen as opaque. So what are those G20 commitments? Well, first of all standardized OTC derivatives should be traded on an exchange or electronic trading platform. They should be cleared through a central counterparty, a CCP, and if they're not centrally cleared, they should be subject to higher capital requirements. And the last point, commitment, is that all OTC derivatives should be reported to a trade repository. Some regulators, particularly in the US, argue that if such measures were in place during the 2008 financial crisis, that the US government wouldn't have been caught off guard by the huge build-up of systemic risk in the credit default swap market.
I'm going to ask if you can finish afterwards.
So who has taken my slot?
3, 2, 1.
That is by far the best break I've ever had in my life. Anyway, back to the important stuff. In the US, the Dodd-Frank Act requires firms to report their OTC derivatives trades on an almost real-time basis to a SDR, a swap data repository. And this is fantastic because it brings transparency, at least for the US markets. In Europe, things are slightly different. Their OTC derivatives under EMIR only have to publish aggregated weekly report of the OTC derivatives trades that they collect. So despite the move to transparency, there are big problems with the quality of the data published and disseminated by trade repositories in Europe and SDRs in the US. So why is this relevant for Africa? And I think that's very important. So although African countries have no derivatives markets, of course, to the exception of South Africa and a few others, initiatives to introduce derivatives market on the continent are growing. So this means that Africa will need to be aligned with international norms and standards. IOSCO, the International Organization of Securities Commission, has recommended the trading of OTC derivatives on stock exchanges in the continent. In the case of South Africa, of course, South Africa is part of the G20, so the country is certainly looking to comply with the commitments and principles that I've outlined earlier on. Thank you all very much for taking the time to listen to me, and if any of you wishes to develop any of this, please reach out to me or Sally and Taylor. Thank you so much.
Thank you very much. Also, Silua, I would imagine that that will be the only time in your life where your public speech will be interrupted so that you can sound a kudu horn. So I hope you enjoyed it. Thank you very much.